Oh man, a shock! Jobs figure sees Bitcoin and crypto markets pumping here to the upside here today on a Thursday. I'm going to break down exactly what's going on, what I'm seeing in the structure. If you appreciate these updates, smash up the likes. Do not forget to subscribe. If you remember, if you've been following my videos over the last kind of few days, you've had a lot of crazy volatility here in crypto assets and just the stock markets in general globally. And as I've said in those videos, the main focus right now, having, the Bank of Japan has already bailed out. I covered that off in yesterday's video. The main focus now is growth. This market, remember, is worried as to whether we're going to be falling into a recession. And how are they going to determine that? They're going to determine that by looking at the data that comes out. Jobs data, inflation data, manufacturing data, company earnings, all of these things are the narratives which are going to decide if we have a good day in crypto or a bad day in crypto. So when I'm deciding my trades, when I'm deciding my investments, I'm looking at these volatility factors. Today, we had a jobs report. That jobs report came out in a positive manner. I'm going to explain. So we had the weekly jobless claims. This tells you how many people claimed for unemployment. 233,000 versus the 240,000 that the market was expecting. This is positive news. If less people are claiming joblessness, that means that the economy is doing healthier than the expected figure. This is the main narrative right now. When all of these data pieces come out, market participants are going to be like, oh, does that mean we're in a recession? If it does, they're going to overreact. Oh, does that mean we're okay and we're avoiding recession? They're going to overreact to the upside. So you can play that volatility if you're experienced, or at least be very aware of it. If this was a bad figure, for example, we'd be down 2-3% today. And that could give you an opportunity to buy the dip. When the next piece of data comes out, whether it's a CPI, manufacturing, or companies' earnings, if it's bad, you can use that to buy the dip, right? This is the main focus now of the market. If we get a bunch of data pointing in the same direction, in other words, if the next handful of data points that come out point to the fact that we're heading towards a recession, expect us to rotate risk off. Then we're going to get lower price points because the market is going to be scared that Jerome Powell is doing too little too late and he's only starting to cut rates because we've hit the Titanic into the iceberg. Right? That's the main focus right now. So when you look at it, if you look at what the market is pricing in, the market has firmly priced in for a couple of days now that we're going to get a double rate cut in just over 5 weeks time from now on September the 18th. They're expecting not just one rate cut, but a double one, 50 basis point rate cut. Now what that means is if we don't get that, then the market's going to be upset, right? Because the markets are pricing in a double one. If Jerome Powell comes out in just a 25 basis points, which is what I think he will do, then the market in its current guise would be upset at that. So don't be surprised to see these percentages kind of go back and forwards over the next 5 or 6 weeks. Of course, we'll cover it here on this channel. But for today, good data. And it comes at an important time because we have managed to not only hold our structure here, but get that well-needed bounce. And now that we've got that bounce, we can start to look at where is the level we can test. And the main level we can test here is our EMA ribbon, right? The EMA ribbon starts to come in from this level at about the 61.1 level. So at least a nice little rally here from 57, 58, up towards 61, and even getting to this important level. Remember this important red rectangle we had where we lost the support? If you guys were watching the content, you know we created the M pattern. I warned of it. We then broke down all the way to the bottom of our channel. This is not me just making it up in hindsight. If you guys follow the content daily, you will know we called all of this stuff. We knew that there would be a sensible pullback from the top down to the bottom, particularly once we lost the key support level. Well, guess what? Support now becomes resistance. If you guys want to learn all this TA, ijazcrypto.com/TA. I've made videos on every single one of these topics. EMA ribbon, head and shoulders pattern, support resistance, doji candles, all the things you need to become a TA pro in crypto. It's all in a structured place. If you're interested in that, link will be in the description. So, important level here for us to get to this, new resistance level and break above it. I mean, if we can work our way above this and start working our way to the top of the channel, perfect. Because ultimately, what is this pattern? You guys will notice this is a big bullish continuation pattern. I know it sounds crazy given the crazy week we've just had, but we bought the dip up and all of this panic has pretty much been bought. Look at the candle here. This is an insane doji candle. Again, you would have learned it in the TA program. This is a big doji candle which presented us with opportunities to buy the dip. And both these yellow dots I shared with you guys before the price action crashed. I said, guys, I'm buying the dip here and I'm buying the dip here. And it played out perfectly. You got the dip here on the breakdown from this pattern and you got the dip here at the bottom of the channel. This is what TA allows you to do. It allows you to position yourself where other people are panicking. You say, hang on, this is just a nice pullback. I'm not too worried by that at all. That's just a pullback into the EMA ribbon. Why should I let that panic me out? In fact, if more times than not I can buy that dip, I'm in a good position. Now, it'll be silly of us to not think about what are the negatives, right? Because so far, if we look at what we've had over the last couple of days, it's been a complete trap to the downside. All they did was they shook you out. The Bank of Japan feared everyone. Markets were scared about a recession. The price on Bitcoin dumped below 50,000 and all the weak hands sold. Please, guys, please, I urge you, stop selling your Bitcoin to these people who know what they're doing. They manipulate the market, they move the market to the downside, and then they take your hard-earned Bitcoin because they panic you out. If you go and look at the stats now, and I said this at the time a couple of days ago, I said, guys, wait a couple of days and you will see that the stats will show that the whales were buying your Bitcoin. And the stats are showing that now. Whales have topped up over the last couple of days. They bought more Bitcoin under 50,000. And maybe that's the last time we're going to see Bitcoin under 50,000. Right? And they managed to shake people out. So really important, you don't let these flash crashes make you emotional because they can still happen. Right? We can have another fall down. Why not? Why not lose our EMA ribbon and go sideways for a couple of months? It's possible. If US economy ends up in a recession and all the company earnings are horrible and GDP is really slow, we see the labor market collapse on its knees, unemployment really high, market's going to rotate risk off. Are you ready for it? There is no guarantee that price just goes up and up and up, right? But if you zoom out over long enough here on crypto, and I'm showing you the monthly chart now, every single person that ever held Bitcoin, that ever bought it since 2008, if they didn't sell and they held it up to all-time high here, they were living it large, right? They did really, really well. And ultimately, that's what you need to remind yourself. One, have conviction. Believe in the asset classes you buy, right? And I think that's fundamentally what's missing amongst this new breed of crypto investors is we're buying without conviction. You're buying because your friend told you it's a good thing to do, or some YouTubers told you it's a good thing to do, or someone on X, right? You need to have your conviction because ultimately nothing is stopping you from waking up in the morning, reading a scary news article, seeing the price on your portfolio dump and you pressing the sell button. No one can give you the conviction to buy the dip instead of panic selling. You've got to develop your own conviction. And I know that's boring because you want to be handed all the answers, but I'll give you the real answer. The real answer is had you have held Bitcoin at any point in history and just held and held and held, you'd be in a really good position right now. And you know that's the case. So focus on the basics. Stop trying to overcomplicate this crypto investing stuff. Really, it can be that simple. Hopefully you found this useful, guys. A really positive jobs figure that shows that unemployment isn't as exaggerated as some people were trying to make it last week. But again, we're going to be swayed by every single data piece. There's going to be a roller coaster. Oh, look, positive number, exciting day. Oh, look, negative number, we dumped 4 or 5%. So I'm going to be taking advantage of that. I'm already trading in a Telegram group, echarlescrypto.com/TG. Just dropped a new trade in there today because I want to take advantage of this volatility. When we dump, great. I'll wait for support and I'll buy again. These volatile days are beautiful for trading. Not great for investing because you kind of watch your portfolio go up and down. But as long as you forget that and focus on your active trading, it's a great time for you to profit from the volatility. Hope you guys found this useful. If you did, don't forget to smash the likes. Don't forget to subscribe. And I'll see you in the next one.